and welcome along to the Property Academy podcast by Opus Partners. I'm your host, Seb McKnight.
I'm Andrew Nicol.
And today on the show, we're talking about our OCR forecast for 2025 and how far the Reserve Bank might drop the official cash rate. So in today's episode, you're going to get what the OCR could do, how that could impact your mortgage interest rate, and on top of that, we're going to talk about whether you can actually believe the Reserve Bank's forecast. Now, Andrew, what does the schedule look like for the Reserve Bank? Like how many times can they cut the OCR in 2025?
Okay, so the first one occurs in about middle of February, and then they're every 6 weeks after that up to November. So you've got 7 opportunities or 7 reviews of the OCR next year.
Yeah, and the Reserve Bank governor always says, yeah, if anything changes, they could always have a snap meeting. It's not like they've got to wait until that, I can't change the OCR.
It doesn't happen very often though, does it? Maybe
No.
COVID? Did it happen in COVID?
Yeah, they had an emergency meeting and cut the OCR real quick.
That's the only time I can remember. Can you remember any others?
Yeah, but you can't remember what you had for breakfast this morning, so that's not saying much. It's the Andrew Nicol memory test.
Yeah. Okay, fine.
But there are basically 7 opportunities, is what we can expect. And the most recent announcement, Andrew, suggested that there could be some more cuts pretty early next year.
Yeah, the kind of thinking at the moment is that we're likely to see an OCR cut down to 4% early next year.
Yeah, and might be even further. If we look at what the Reserve Bank thinks the OCR is going to do, we can match up kind of what they were forecasting 3 or 4 months ago with what their most recent forecast is. And they are saying, look, compared to what we thought back in August, we think we're going to cut the OCR a little bit faster than we previously thought. So at the moment, we are sitting at 4.25%. They reckon that by December, we could get down to 3.5%. So that would imply kind of 0.75% worth of cuts in 2025. And if we compare that to what we saw this year in 2024, in only 6 months, we've seen 1.25% worth of cuts. So we've seen really, really fast cuts at the end of 2024. It looks like those are going to slow down in 2025. We might see 0.75% worth of cuts over the whole year. Now, what you also need to know, though, is when the Reserve Bank puts out these forecasts and says, this is where our heads are at. This is what we think we're going to do over the next kind of 3 years. They change their mind all the time. And they're often very inaccurate in terms of what they say they're going to do versus what they actually do. So if we think back to even just earlier last year, 2023, when they put out their predictions, they were like, we think we're going to keep increasing the OCR. We think there's a pretty decent chance we're going to get to 5.75%. And we don't think that we're going to get to 4.25% until June 2026. Well, in November 2024, they got to that point. So they arrived roughly 19, 20 months earlier to that point than they thought just back in 2023.
Now, I remember we've had conversations about this. My thoughts are that the Reserve Bank maybe talks a bigger game to try and control people's spending. But I'm pretty sure you've told me that that's not the case.
Well, the way that they actually put these out, right? You got to remember, what is the Reserve Bank actually doing? They're not just drawing a line and saying, this is where we're going to talk about. Oh, Adrian, just draw the line a little higher. Just tell the people that the OCR is going to be higher so that they'll spend a little less.
Trick them into spending less at Christmas.
What the Reserve Bank does is they've got a spreadsheet and multiple spreadsheets. They've got a whole model about how they think the economy works based on how the economy has operated in the past. And they feed all of the current data into it. And these are just outputs from their models.
Right.
These are just outputs from their spreadsheets.
But surely you can control the output by what you put in.
Yes, you can. But my point around that is they just say they feed the data in, they might make some tweaks, and then they get the models out.
Right.
But what they can't factor in is, well, what unexpected events might happen that change everything. So even if we think about back in like 2016, the OCR was 1.7%, and they basically kept it at 1.75-ish%, up a bit, down a bit, over that whole period because the economy was so stable. Then they thought they would gradually have to raise it throughout 2018. In fact, they cut it quite substantially because COVID came along, and they couldn't have predicted the fact that COVID could come along, and they couldn't predict that there were worries about deflation prior to that. But my main point is when you look at a graph like this, and I understand that if you're walking your dog or you're on your treadmill or, you're in the shower, like some of our listeners tell us they are when they listen to the show,
Manual.
you can't see this graph. But what we often see is the Reserve Bank puts out pretty smooth forecasts saying if the economy just adapts how we think it will, this is what the OCR will do. In reality, life is much more jagged. And so because of that, the OCR jumps around a little bit more. But I think it's worth putting this out there so that when you look at the Reserve Bank's current forecasts, you don't look at it and be like, well, that's exactly what's going to happen, because that's not exactly what's going to happen because the future hasn't happened yet. And actually, Andrew, talk to us about the OCR's, the Reserve Bank's OCR predictions for 2024 and even how much they changed just this year.
Yeah, this year has been an interesting one, and I'll go through some of the highlights, but the key message is that the predictions have evolved quite a lot over the last 12 months. So in February, the Reserve Bank thought there was a decent chance that the OCR would hit 5.75 by today. Now, right now, we're actually at 4.25, so we're way lower, 1.5% below where they imagined they were going to be. Now, in May, only 7 months ago, the Reserve Bank increased the chance that we would hit 5.75. Now, again, we're at 4.25 today, so 1.5% lower than that forecast. So huge difference, particularly if you think about that as a percentage. In August, only 4 months ago, the Reserve Bank thought there was a good chance we'd hit 4.75. Again, we're still 0.5% below that. So I think they've been expecting to keep the OCR a lot higher for a lot longer, but that hasn't eventuated, so they've had to adjust their forecasting quite a lot this year.
And just to defend my fellow economists, what you've got to remember as well is often an economist or a modeler or a model builder is not trying to pick the exact number that interest rates will definitely be, and this is exactly what I think it is going to be. What they do is they're trying to pick the direction of travel. Now, what was really interesting in 2024 was that in the first couple of forecasts that the Reserve Bank put out, they were still in that mindset. Their view and model of the economy was that inflation is going to be really sticky. We're going to have to keep being tough. We're going to increase the OCR a bit, or there is a decent chance that we're going to do that, and that it's only going to come down really, really slowly. By the time we got to August, they kind of capitulated. They changed their mind, came to the view that a lot of people in the market had come to, which is that the OCR needed to come down faster. And so we saw a real change in their mindset at that point. So again, the exact numbers, it's normal that they wouldn't be 100% right. What they're genuinely trying to pick is the direction that we are moving in. And what I wanted to do as well is move away from just the Reserve Bank and even us and think, well, what about other banks? Where do they think that the OCR is going to move throughout 2025?
So just for context, we at Opus kind of forecasts 2.75 for the OCR over the long term. And again, it's going to be higher than that sometimes, it might be lower than that sometimes, but 2.75 is the long-term average we use. Now, the major banks released their forecasting in November, just before the last announcement, and Westpac kind of are saying 3.5% by mid-year next year. ANZ, they're 3.5% by mid-next year. And BNZ are 3% by mid-next year. So kind of somewhere between that 3 and 3.5%. So even lower than what the Reserve Bank are saying.
Yeah, Kiwi Bank's around 3% as well. So if we get around to that 3 to 3.5% by next year, that's kind of the ballpark that we're looking at. The Reserve Bank saying, look, we might get to 3.5% by the end of next year, but 3 to 3.5% is what you'd expect to see in 2025. I think that's pretty reasonable.
And so at that stage, we might see 1 year fixed rate at kind of about 5%.
I think low fives is pretty reasonable. Again, one thing that I just want to keep talking about because it's very important is just the fact that markets move before the Reserve Bank does. So even if we look at Kiwi Bank's forecast of like the OCR and the 2-year wholesale rate, which is just think of it as what it costs the bank to borrow money and lend it out to you and me. The thing is, they are only predicting that the 2-year wholesale rate is going to fall by about 0.5% throughout 2025, whereas they think that the OCR is going to drop another 1.25%, and it's just because the markets have already priced a lot of this in. Now, what I am not saying is that the 2-year rate's going to stay exactly where it is right now, but I'm just tempering expectations that, wow, the OCR is going to go down another 1.25%. So right now I can get a 2-year rate at 5.5%. So take 1.25% off of that. I'm going to be able to fix my rate at 4.25%. It doesn't work like that. A lot of the cuts have already been priced in.
Yeah, and I know there are some disappointed investors who have been sitting on floating for that last OCR announcement, hoping to see 0.5% off the 1-year fixed rate. And then there was kind of a 20 or 10 basis point change, and they're feeling ripped off. So I sent them an article that we spoke about exactly this. Some of the pricing had already occurred.
Yeah. And so you already got the benefit of that. Then it just comes down to everybody's risk tolerance, and hopefully we're all getting really good mortgage advice about just understanding what's the likelihood that rates are going to fall.
But again, you're gonna always use the standard economist line. We're gonna get it wrong so that you can disclaimer yourself out of any bid anyway.
Well, the future hasn't happened, Andrew.
Oh,
How am I supposed to know what's going to happen?
Well, yeah, when you took my $1,000 off me for losing the
you're
bet.
going to keep going on and on and on about that. It was a bet, Andrew.
Yeah,
and
I
you
can't
lost.
believe you took it. The future hadn't even happened.
Oh, God. That's why we bet on it. That's what makes it exciting.
Wasn't exciting.
Whatever happened to my friend Andrew? So what have we learned over the last 15 minutes? We've talked about what the OCR could do in 2025, how it could impact your mortgage interest rate, and whether you can actually believe what the Reserve Bank says anyway. And if you are listening to this on Apple Podcasts and Spotify, you want to see some of the graphs we're sharing, just Google Opus Partners YouTube. It'll be the first thing that comes up. We release new videos on YouTube every Monday and Wednesday. Right, let's wrap it up there, but please don't forget to rate, review, and subscribe to the podcast. It really does help us get the message out to more people. Thanks for listening to the Property Academy podcast. I'm your host, Stephen Knight.
And I'm Andrew Nicol.
We're going to be back again tomorrow with even more daily strategies, tactics, and insights to help you get the most out of the New Zealand property market.